Insightful Value here, spotting Reply S.p.A.'s recent stock slide and asking, is this a soft landing that signals opportunity or a warning siren worth heeding? This analysis is for informational and educational purposes only, not financial advice. If our deep dive helps, hit subscribe, smash that like button, and share your thoughts in the comments. Reply S.p.A., based in Turin, is an Italian leader in IT consulting, systems integration, and digital services, specializing in areas like cloud computing, big data, artificial intelligence, Internet of Things, and cybersecurity across industries such as finance, telecom, manufacturing, energy, and public sector. The company's stock has pulled back to the low €120 range, about 30% below its 52-week high of €169.50. From a value perspective, Reply shows solid performance. Trailing 12-month revenue sits around €2.42 billion, with net income of about €235.95 million, giving it a price-to-earnings ratio near 19.4 and a forward PE below 17. Profitability metrics are solid. Gross margin roughly 19.8%, operating margin around 15.2%, and net profit margin near 9.8%. The company is net cash positive, with about €361.75 million in net cash and strong free cash flow of €316 million over the past 12 months. Return on equity is high, around 18.7%, and return on invested capital about 15.7%. Looking back at 2024, Reply grew revenue 8.4% to €2.296 billion, boosted EBITDA to €410.6 million, EBITDA margin of 17.9%, and net profit rose to €211 million, net margin of 9.2%. These figures reflect steady expansion and disciplined operations. On the dividend side, Reply pays an annual dividend of about €1.15 per share, yielding just under 1%. Dividends are modest relative to earnings but demonstrate consistency. But there are risks to weigh. The stock remains volatile relative to its own history and underperforms broader Italian indices, down roughly 6% over the past year while the market rallied. Demand for consulting and digital services may fluctuate with economic cycles, and margin pressures could emerge if competitive or macro factors shift. Also, while margins are respectable, they are not exceptionally high for tech-focused firms. So, why might now be an interesting moment? The nearly 30% drop from the peak may offer a value entry point, especially given Reply's strong cash position, healthy margins, and solid return metrics. Conversely, if you're cautious about economic slowdowns or see limited dividend income, it could be prudent to wait for clearer signs of rebound. In short, Reply S.p.A. delivers robust fundamentals, disciplined growth, solid profitability, strong cash flow, and a net cash balance sheet. The stock's recent dip opens a potential opportunity, but risks linger around execution, macro trends, and valuation. Worth watching closely depending on your outlook and risk tolerance. At Insightful Value, we break down undervalued companies in a way that cuts straight to the essentials. No jargon, just clarity for better informed decisions. For more of these deep dives and value-driven breakdowns, head over to InsightfulValue.com. Want us to review a company of your choice? Reach out at info@InsightfulValue.com. And don't forget to subscribe to our channel and swing by the website for more insight.